Good morning, everyone. It's Josh Hayes with Hedge Plus here for this week's Q&A, the Grain Gauntlet, here with Patrick. 5 questions as always. This week, all 5 questions are from farmers. No prospect questions. Couple reasons why we are taking a little early this week. And also, there's one question that I was really excited to get in here. So with that, you ready?
Yep.
All right. Question number 1. Are you getting nervous about having unsold old crop?
No. 95% of the time, we have some kind of rally during the summer. We've had a week where we're 16 cents higher in September corn. I like to be sold by July 1st. I think we get enough of a rally to get up another 20, 25 cents where we can make another good sale. And if the weather gets a little hairy, we could see a much higher price than that. So we took a risk on 30% of the corn and 25% of the beans to see what the weather would bring, because sometimes weather brings $1 and sometimes it brings 20 or 30 cents. Either way, I expect to see it close to our $5 area to make sales 480.
Yeah, we've talked about so bad. So far nothing's been lost. People who sold out 2-3 weeks ago were at the same level, if not higher. At least we're given the opportunity, in case we do get that rally.
Yeah.
And a weather
Farmers paying all that money for bins, they should at least wait for some summer weather rally potential. That's why you guys bought the bins, is to have something available for the big price moves. Take a look at charts. When do we get those? June, July.
Exactly. Okay. Number 2, the USDA keeps tightening stocks, but the hedge funds keep getting shorter. What do you think they're betting on?
I don't think they're gonna. I think they're gonna get less short as we go. I have no idea what's in their heads. I know that it was really good weather. Quick planting pace that always pushes prices lower. And if you're a fund manager, you gotta be smart enough to realize, hey, planting quick. What does that do when you plant quick? It takes risk out. The crop is planted. Anytime the crop progresses, that means there's less risk to the crop. And less risk means lower prices for that period of time. Period. That period of time. Period.
Right. Okay. All right. Number 3. So the funds keep getting shorter and related, I guess. So funds keep getting shorter with corn and soybeans, yet the market made nice gains last week. Does that mean the commercials are buying?
I hope so. The only entity that's big enough to push out a unified fund buy or sell is commercials. They need to protect themselves with low prices. This is extremely low prices. Also, the thing that can push prices higher is better basis, because farmers aren't selling. And that will force the commercials to buy futures so they can lock in that price. We definitely saw basis get better last week for corn and soybeans.
Yeah,
Fascination.
I think a lot of people were surprised to see Friday's commitment traders report showed that the funds went shorter on both corn and beans, and that I saw people going into that speculating, well, they had to cut some of their shorts. And it turns out they didn't. So somebody was buying last week, because we had a pretty decent rally, anywhere from 10 to 20 cents. So,
by the way, what happens if the funds get out of their shorts? What happens if the funds get long? Ooh, that's $5 corn easy pickle.
And that hasn't even started. As maybe at the end of the week, we'll see next week. Yep. All right, number 4. It seems everyone either has had too much rain or not enough. What do you see as the biggest weather issue going forward?
What do they call it? Angular momentum is what I heard from Eric Snodgrass. Angular momentum is how fast systems move across the world, around the world. Jet streams. First of all, jet stream is way to the north. We expect that to stay there. But the angular momentum is slowed. That means we get rain in the same places over and over and over again. We have cutoff lows that don't seem to move. If you don't believe me, call somebody in southern Illinois, okay, or Oklahoma. They've been drenched. Ohio River Valley. Systems move very slow. Here in the Midwest, Wisconsin in particular, Minnesota, we've had mostly high pressure systems just sit over us. If that happens in the middle of summer when we're at the hottest time of year, oh, we could have too hot in places and too dry, and we could have wet and cool in other places where maybe it's too wet for the crop.
Yeah, that's definitely what we've been seeing, and that's the kind of thing that has weather premium for everyone made. Like the question says, some people have been too dry, and that's because systems are just completely avoiding them, and other systems are parked over certain areas and just drenching everybody. Either way, it's not necessarily, well, it's not good. So
Yeah, for normal weather, we need to see things move quickly across the United States like normal, where you get a front in the northwest and moves out across the United States and out of the country within 3 or 4 days. That is not happening right now. And again, very risky for the summer.
okay. All right, final question. This is the one I really want to know. I'm looking forward to hearing what you have to say about this. So the question was, I read a story about the egg futures market possibly going to 24/7 trading hours. What are your thoughts on that? And if it came to be, how would you adjust?
I wouldn't adjust at all because it's just stupid. The people that trade on the overnight, man, I don't know how you make money on the overnight, to be honest with you, because the market makes no sense at all on the overnight with the thin volume. So we just have thin volume 24 hours, okay? The vast majority of trading is going to be done when the big boys trade, and they're going to continue to trade from 8:30 to 1:30. No need to change anything. If you want to stay up all night and watch the markets, you can do that now to add a few extra hours of really light volume. Crazy.
Would it require anything like putting in, market stop orders or
I don't use stop orders very often because they can get hit in weird times, right? And stop orders are usually protective orders, so you got a long position, gets stopped out, and then goes up the next day because thin volume took you out. Yeah, too dangerous. Too dangerous. And we use mostly option strategy. And options don't trade all the time anyways. They definitely are not going to trade their thin volume.
Okay, good to know. Thank you for answering that. All right, that's all for this week. Thank you for the questions. As always, if you have a question you want to have answered, please email it to adminstaff@hedge-plus.com. Other than that, have a great week, everyone.
Summer's here. Get ready for bigger price swings. Thank you.
All right.